Good day, everyone. We are from Group 3 and we would like to discuss our report about liabilities. But before we will start, let me introduce to you my group mates. First reporter, yours truly, Jihan Bahada. Next, Vivian Gretch Jane Talares. Then, Kimberly Medico, Melka Ori, and lastly, Kyla Jane Leorna. Now, as a start, let's define liabilities based on the revised conceptual framework. So, liabilities, it is a present obligation arising from an entity to transfer an economic resource as a result of past events. There are three elements in the definition of liability. Number one, the entity has an obligation. An obligation, it is a duty or responsibility that an entity has no practical to avoid. There are two types of obligations in this manner. So number one, legal obligation, and number two, constructive obligations. So when we say legal obligation, these are obligations that are enforceable by law. In civil code, it is defined what are the things that gave rise to an obligation, so it may be from a law, contract, quasi-contract, delicts, or quasi-delicts. Most of liabilities are from legal obligations because in most cases, obligations are bounded by contract. Then, number two, constructive obligations. These are obligations because of normal business practices. Then the second element in the definition of liability is the obligation is to transfer economic resource. One thing that should be understood in the transfer of economic resource that it is important to know that someone will transfer economic resources that someone has to pay. The third element in the definition of liability is the obligation is a present obligation that exists as a result of past events. A present obligation exists as a result of past events only if the entity has already obtained economic benefits or taken an action, and as a consequence, the entity will or may have to transfer an economic resource that it would not otherwise have had to transfer. Okay, now we go to liability recognition principle. When we say recognition or recognize, we mean that this is the term where we say it is included in the financial statement. For liabilities, we specifically say that it is recognized if it is recorded in the balance sheet. So for it to be recorded in the balance sheet, a liability should probable and it should be measurable. So those two must be present. Under PFRS 9, financial liabilities are recognized in the statement of financial position when the entity becomes party to the contractual provisions of the instrument. Next, financial liability versus non-financial liabilities. So what is a financial liability? A financial liability is any liability that is a contractual obligation to deliver cash or another financial asset to another entity or to exchange financial assets or financial liabilities with another entity under conditions that are potentially unfavorable to the entity, or it can be a contract that will or may be settled in the entity's own equity instruments and is a non-derivative for which the entity is or may be obliged to deliver a variable number of the entity's own equity instruments, or a derivative that will or may be settled other than by the exchange of a fixed amount of cash or another financial asset for a fixed number of the entity's own equity instrument. So other liabilities that did not meet the above requirements are non-financial liabilities. So examples of financial and non-financial liabilities. Example of financial liabilities, number one, accounts payable, utilities payable, accrued interest expense, cash dividends payable, finance lease liability, bonds payable, and security deposit. While on the other hand, example of non-financial liabilities, advance from customers, unearned rent, warranty obligations, income taxes payable, SSS contribution payable, PhilHealth contribution payable, then deferred tax liabilities. So, to better understand this topic, I will show you an illustration, page 1049, classification of liabilities, current versus non-current. Illustration, classification of liabilities, current versus non-current. Kobe Company has the following liabilities as of December 31, 2021. Trades account payable, 600,000. Bonds payable, 500,000. Trade notes payable, 100,000. security deposit 100,000, cash dividends payable 80,000, property dividends distributable 75,000, held for trading financial liabilities 60,000, income tax payable 50,000, advances from affiliates 50,000, trade accounts payable granted to officers 30,000, salaries and wages payable 25,000, SSS premiums payable 22,500, deferred revenue 20,000, unearned rent 15,000, share dividend payable 15,000, bank overdraft 15,000, credit balance in customers account 10,000, bank overdraft ay, sige. Bank overdraft 10,000, credit balance in customers account 8,000, deferred tax liability 5,000, accrued expenses 5,000. Then additional information deducted from the trade accounts payable are debit balance in suppliers account 20,000, undelivered checks 16,000, post-dated checks 8,000. Excluded from the trade accounts payable are goods received on consignment 18,000, goods in transit shipped FOB shipping point 17,500, goods in transit shipped of FOB destination 15,000, then bonds mature in 5 equal semi-annual installments. Security deposit was received from a lessee. The amount will be refunded on December 31, 2026. The deferred tax liability arises from a temporary difference which will be reversed in 2022. So required, determine the amount to be reported in the December 31, 2021 financial statement as current liabilities and non-current liabilities. So, to compute the total current liabilities, so mo ang ijang solution. So, trade accounts payable unadjusted is 600,000. So, nga nung unadjusted na siya, kaya na pa may mga additional information. Then, i-add na to ang debit balance in supplier's account nga 20,000. Supplier's account 20,000. Then, undelivered checks 16,000. Post-dated checks 8,000. Then, goods in transit ship FOB shipping point na 17,500. So, i-add na to 600,000 plus 20,000 plus 16,000 plus 8,000 plus 17,500. So, the trades account payable adjusted na siya is 661,500. Muna siya ang trade accounts payable adjusted. Then, i-add pa nato ang ubang mga na-classified as current liabilities. Bonds payable. Ato na i-compute is ang current portion. 500,000 times 5 divided 500,000 divided by 5 times 2. Ang 5 is mao na siya ang 5 years na ma-mature ang bonds. Then ang 2 years is mao na siya ang 2 years of payments remaining until maturity. So na ay 500,000 divided by 5 times 2 equals 200,000. Then trade notes payable na 100,000. Then cash dividends payable na 80,000. Property dividends payable na 75,000. Held for trading financial liabilities 60,000. Income tax payable 50,000. Then trade accounts payable granted to officers 30,000. Salaries and wages payable 25,000. SSS premiums payable na 22,500. Deferred revenue 20,000. Then unearned rent 15,000. So unearned rent classifies it as current liabilities because you have received cash for the rent payment prior to the completion of the period for which the rent is owed. Then add na po nato ang bank overdraft. Um, classified siya as current liability that is payable within the accounting period. Then add po nato ang credit balance in customer's account na 8,000. So ano na-classify siya as current liability because kuan siya, for example is ang naay nang utang nimo na 1 million, then ang idyang ibayad is 1.5 million, then ang katong sobra is mahimo si siyang current liability because the company owed to return the excess. So mas siya classify siya as current liability. Then accrued expenses na 5,000. So mo na siya ang na-classify ng mga current liabilities. So para ma-total na to og pila ang total current liabilities, ato na silang i-add. So 600,000, 500 plus 200,000 plus 100,000 plus 80,000, 75,000, 60,000 plus 50,000 plus 30 plus 25 plus 22,500 plus 20,000 plus 15,000 plus 10,000 plus 8,000 plus 5,000 equals the total current liabilities is 1,362,000. So muna atong total current liability. So to compute the total non-current liability, so medyo ang bonds payable non-current portion. So natin non-current portion na 300,000, then security deposit 100,000. So security deposit is na-classify siya as non-current liability. For example, ani is mga boarders. So if the tenants intend to occupy the rental unit for more than 1 year, the landlord that receives and holds the security deposit would report the amount as liability. So depende din siya current or non-current liability depending on the length of a rental. Then next is advances from affiliates na 50,000. Then deferred tax liability na 5,000. So mora na sila ang na-classified as non-current liability. So atong i-compute na sila kung pila tanan ang total non-current liabilities. So 300,000 plus 100,000 plus 50,000 plus 5,000 na atay 455,000. So manadya ang total non-current liabilities.
Illustration, determination of initial measurement and amount to be remitted. On June 1, 2021, Angelica sold merchandise with a list price of 5 million to Ash. Angelica allowed trade discounts of 20% and 10%. Credit terms were 5, 10, and 30, and the sale were made FOB shipping point. Angelica prepared 200,000 of delivery cost for Ash as an accommodation. So atong hinahinayon ang illustration. Pagka June 1, 2021, si Angelica is nakasold og merchandise nga list price is 5 million. Then trade discounts nga nahitabo nga 20% and 10%. Then ang credit terms is 5, 10, and 30. So if makapay ka within 10 days, so na kay 5%. And the sale were made FOB shipping point. So, si Angelica nag-prepare og 200,000 para sa delivery cost parang Ash as an accommodation. Requirement: what amount shall be recognized as accounts payable assuming ASH records purchases under the following method: gross method and net method. How much will be remitted by ASH to Angelica if payments are made under the following independent situation: June 11, 2021 and June 16, 2021. For the requirement number 1, so atong i-apply ang formula nga atong nahibawan ganiha. List price 5 million less trade discount nga 1,400,000. So giyon sa man ipagkuha ning 1,400,000. So 5 million i-times nimo siya sa 20%, then i-plus nimo siya sa 5 million times 80% times 10%. So 1M plus 400K equals 1.4M. Then, ilas silang duha, 3,600,000. Mo na si Joy mong initial measurement under gross method. Ilas ni mo si Joy sa cash discount, 3,600,000 times 5%. So, na mo gawas nga 180,000. So, ilas sila, 3,600,000 less 180,000. So, na initial measurement under net method, yeah, 3,420,000. So, requirement number 2, if payments are made on June 11, 2021. So, list price, 5 million less trade discount nga 1,400,000. Then equals invoice price nga 3,600,000. Less mo siya sa cash discount nga 180,000. So, maapil pa siya sa cash discount 10 days pa man after na sold ang merchandise. So, masold pa siya sa credit terms. Napa siya less 5%. Then, payment before freight. So, nasa 3,420,000. And i-add nimo since FOB shipping point and freight prepaid siya. So, nasa 200,000 nga katong delivery cost. So, i-add to nimo siya. Then, maka-come up ka og total amount due nga 3,620,000. To continue, if payments are made on June 16, 2021. Again, list price 5 million less trade discount nga 1,400,000. Less lang duha, then na ay invoice price nga 3,600,000. As you can see, na cash discount kinahitabo. Then lapas naman siya sa 10 days. So na siya cash discount and payment before freight na siya 3,600,000. I-add to nimo tong 200,000 nga delivery cost as accommodation. Then na kay total amount na 3,800,000.
Illustration: Determination of accounts payable balance. On December 31, 2021, Michael Ko has accounts payable of 2 million before possible adjustment for the following. Checks drawn but not yet released to payees amounted to 48,000, and the post-dated checks drawn and released to payees amounted to 20,000. So sa letter A, natay unreleased checks and post-dated checks, which is 48,000 and 20,000 respectively. Letter B, on December 28, 2021, a vendor authorized Michael to return for full credit goods shipped and billed at 100,000 on December 14, 2021. Michael shipped the returned goods on December 31, 2021, but the credit memo was received and recorded only on January 3, 2022. So letter B, natay purchase return diri nga nahitabo pagka December 28, 2021 nga nagkandidad og 100,000. Goods shipped FOB shipping point and freight prepaid from a vendor on December 28, 2021 was recorded at invoice cost at shipment date. The invoice cost is 56 while the freight cost is 12,000. Sa letter C, natay unrecorded freight shouldered by seller. So si buyer ta mo shoulder sa freight, so si seller man ang shoulder, so ato nang i-appeal. goods shipped FOB destination Freight Collect were received on December 29, 2021. The invoice cost of 160,000 was credited to accounts payable on the day of receipt, and the related freight of 20,000 was debited to an expense account. So letter D, freight paid on behalf of the seller. So a requirement is compute the adjusted accounts payable on December 31, 2021. Solution, so natin ang adjusted balance ng 2 million. Unreleased and post-dated checks na 68,000. So nakuha ang siya at 20,000 plus 48,000 equals 68,000. Then, sa purchase return, na si purchase return na hitabo. So, yung purchase return niya na hitabo. So, na-adjay less na 100,000. Then, the C, okay, unrecorded mo itong fruit charge na fielder ni seller. So, nakuha si dyan i-appeal o compute 12,000. And sa D, katong 20,000 na katong freight paid on behalf sa seller. So, minus 20,000 equals total adjustment accounts payable na 1,960,000. Illustration, bonus calculation. Riel, president of the CPA Co., has an arrangement with a company under which she receives 10% bonus each year. For the current year, the net income before deducting even the provision for income taxes or the bonus is 5,500,000. Remember, sa 10% bonus each year. The bonus is deductible for tax purposes and the tax rate is 30%. Required, determine the amount of Riel's bonus and the appropriate provision for income taxes for the year under the following independent scenarios. Bonus is calculated based on the net income before bonus and income tax. Bonus is calculated based on the net income after bonus but before income tax. Bonus is calculated based on the net income after bonus and income tax. Bonus is calculated based on the net income after income tax but before bonus. Solution. To compute for the bonus, it is imperative to compute for the basis of bonus. To compute it, we must first determine the equivalent percentage of the given net income before bonus and income tax with the assumption that the basis has an assigned value of 100%. From there, we can compute for the basis by dividing net income before bonus and income tax with the percentile computed. Requirement number 1, since the bonus is based on NY, but before B and T, bonus and tax, bonus can be simply computed as follows. So, may itong buhaton, bonus equals NY before bonus and tax times bonus rate. So, diri sa problem, ang net income is 5,500,000. So, butang ta 5,500,000 i-times na to sa diyang bonus rate which is 10%. 10%. Then, mo come up ta og 550,000 yung bonus. Then, sa requirement number 2, first step is to determine the base as follows. So, ang NY na to diri before B and T squeeze. So, nasjay 110%. Ilas na to sa bonus nga 10%. So, come up ta og NY after B but before T og 100%. So, kaning NY after B but before T, pwede na si Japon og 5,500,000 divided by 110%. So, mukam up gyapon si Ja og 5 million. And then, after computing the base bonus, compute na pud ta inganing NY after B before T ay NY after B but before T, mo ni si Ja kaning 100%. times bonus rate. Muna siya nga and bonus rate nga kani. Then 5 million times bonus rate nga 10%. So natay bonus nga 500,000. The table below can also be used to compute the bonus and income tax of requirement number 1 and 2. The net income before bonus and tax, so natay 5,500,000, then mo ni ag 100%. And then, iles na to siya sa bonus nga 550,000 nga 10% aning 5,500,000. And then, ang answer ni is one is net income after bonus but before tax nga 90%, which is equivalent to 4,950,000. And then, ilas na tog income tax, niba ganihag income tax is 30%. So, nasa dyan 1,485,000. I-minus ni silang duha. Then, makakam up taog net income after bonus and tax nga 3,465,000. Then, sa requirement number 2, 5,500,000. Then, naatay nga 110,000. Sa 10%, kuhaan ni nato sa 550,000. 5,500,000 naatay 10%, so naay 500,000. And then, ag 100% ato is ag 5 million. So, i-minus nimo ag 30% sa 5 million. So, naatay 3,500,000. Requirement number 3, to compute the bonus and income tax, the following formula should be used. The first formula is B, bonus, is equals to bonus rate times NY minus bonus minus tax. And the second formula is tax equals tax rate times NY minus B. So we need to substitute the figures to the formula as follows. So bonus is equals to bonus rate nga 10% times 5,500,000 minus bonus minus tax. Then tax is equals to tax rate nga 0.30 or 30% times 5,500,000 minus bonus. As an alternative, the following computation can also be made based on the alternative formula presented in the previous page. Hindi nga niinig percent na to sa formula. Bonus rate times NY times 1 minus tax rate over 1 plus bonus rate times 1 minus tax rate. So, substitute na to 10% times 5,500,000 times 1 minus 30%. 1 over 1 plus 10% times 1 minus 30%. The answer is 385,000 over 1.07. B is equals to 359,813. To compute for the tax, we need to substitute the values of B in the equation of P as follows. P is equals to 30%, katong 30% times NY nga 5,500,000 minus B. Tax rate nga 30% times 5,500,000 i-minus siya sa bonus ganiha, which is 359,813. Then, 0.30 or 30% times i-minus minus ni silang duha, na answer nga 5,140,187 i-times sa 30%. So, ang mugawas mo answer is 1,542,056 pesos. Requirement number 4, to compute the bonus and income tax, the following formula should be used. Ang formula nga to gamiton again is the bonus equals bonus rate times NY minus T, and tax equals tax rate times NY minus B. We need to substitute the figures to the formula as follows. So same ra gihapon 10% bonus rate times nato sa 5,500,000 minus P, and sa P is 0.30 or 30% times nato sa 5,500,000 minus P. As an alternative, the following computation can also be made based on the formula presented in the previous page. So we have here the bonus rate. It times nato sa NY times 1 minus tax rate over 1 minus bonus rate plus bonus rate times 1 minus tax rate. Then 10% is the bonus rate. It times nato sa 5.5 million. It times 1 minus tax rate na 30%. And over 1, then bonus rate na to 10% plus bonus rate again na 10%, it times sa 1 minus tax rate na 30% equals 385,000 over 97%. Our bonus is 396,907. So to compute the tax, we need to substitute the values of B in the equation of T as follows. So T, tax rate na 30% times na to sa NY nga 5.5 million minus B. And then sa tax rate, it times na po, and then 5.5 million i-minus na to sa iyang bonus 396,907. Then nag-answer nila is 5,103,093. It times na to sa iyang tax rate nga 30%. Then after mo come off the top answer nga 1,530,928. So for the summary of the answers, sa net income before bonus and tax, so natay bonus nga 550,000 and tax nga 1,485,000. Then sa net income after bonus but before tax, natay bonus nga 500,000, then natay tax nga 1,500,000. Net income after bonus and tax, natay 359,813 and tax nga 1,540,056 pesos. Then net income after tax but before bonus, so natay bonus nga 396,907 and tax nga 1,530,928. Illustration, unearned revenue, delivery of goods. Jordan Co. requires advance payments for its products. The records of Jordan show the following. Unearned revenue, January 1, 2021, 500,000. Cash received from advances during 2021, 2,500,000. Cash advances applied to orders shipped in 2021, 1,800,000. Advances applicable to others cancelled in 2021 is 200,000. Required, compute for the amount to be reported as unearned revenue, assuming the advance payments received are non-refundable. So the solution for unearned revenue, so sa problem ato makita, so gidyang na-earned ng revenue is 1,800,000. Kaning advances applied to orders shipped in 2021. So ato ni sidyang ni-assume nga non-refundable ang mga advance payments. And then for the 500,000, mo niya yung beginning balance kay as of January 1, 2021. And then pagkaning cash received from customers during 2021, so these are considered receipts for advances nga 2,500,000. And then kaning 3 million kaning total dapat mag-equal ni sila, so 500,000 plus 2,500,000 equals 3 million. So na naman tayo earned revenue diri nga 1,800,000, then natay total diri nga 3 million. Natay total diri nga 3 million and minus 1,800,000, so natay balance or ending balance nga 210,000. Squeeze din si Jack. Next, illustration, unearned revenue, provision of services. Scooty Company sells office equipment service contracts agreeing to service equipment for 2 years. Cash receipts from contracts are credited to unearned service contracts, and service contract costs are charged to service contract expenses as incurred. Revenue from service contracts is recognized as earned over the lives of the contracts. Additional information for the year ended December 31, 2021 is as follows. Nay unearned services contract pagka January 1 nga 200,000. Then as J cash receipts nga nasold 440,000 and service contract revenue recognized siya is 560,000 and the service contract expense is 280,000. Ang required is i-compute nimo ang amount nga dapat i-report as unearned service contract revenue on December 31, 2021 by Scooty. So, gimong buhaton is imo sang itan-awon ang earned revenue. Earned revenue, 560,000. Service contract revenue recognized. Earned revenue, 560,000. Then, sa beginning balance nimo as of January 1, so nakakay 200,000. And then, ang imong receipts for advances, so nakay cash receipts diri for cash receipts from service contract sold, so nakay 440,000. And then, 200 plus 440,000, nakay 640,000. Then, dapat mag-equal po ni siya sa PICAS. So, para makuha na to ang iyang ending balance or the squeeze na ni nga amount is 640,000 i-minus na to sa 560,000, so makagawas ta, so makakam up ta og amount nga 80,000 mo na niyang ending balance as of December 31, 2021. Illustration, unearned revenue gift certificates. Pepenco has just opened a coffee shop and decided to sell gift certificates as part of its marketing and promotional strategy. Ang validity sa cash certificates is 6 months ra. Ipagipakita ang transaction during the year. So, na sold ng gift certificates worth 15,000. Then, naapoy gift certificate nga nagkantidad og 9,000 nga ilang redeem and na 1,000 gift certificate nga na-expired. So, ang ipangita is i-compute ang unearned revenue to be presented as current liability related to gift certificates sold. Ngayong buhaton is imong identify unsa imong redeem gift certificates. So, diri tan-aw na to, ang imong redeem certificate is kaning 9,000 nga na-redeem nimo gift certificate. And then, for beginning balance, wakay beginning balance, diba? And then, sa cash receipts from GC or gift certificate, so nakadiri 15,000 sold gift certificates worth 15,000. So, muna diyang cash receipts from gift certificates. And then, imuyapil ang expired gift certificates nga 1,000 and para makuha nimo ang ending balance or ang squeeze amount, so kay diba, wa mo kay ending, so diba, wa mo kay beginning balance, so bring down 15,000 and dapat mo equal po ni siya sa PICAS. So para makuha nimo ang amount sa ending balance, so yung buhaton is 15,000 i-minus nimo sa 9,000 i-minus nimo sa 1,000, then magawas na ang imong squeeze amount or ang imong balance or ending balance as of that year, which is 5,000. Illustration and earned revenue subscription. So, Irving Company sells sports magazine subscription of 1 to 4 year periods. Cash receipts from subscribers are credited to an earned revenue, and this account had a balance of 4,800,000. On December 31, 2021, before year-end adjustments, outstanding subscription on December 31, 2021 expires as follow. So, pag during 2022, na ay 1,200,000, then 2023 na ay 1 million, sa 2024 na ay 800,000, and 2025 na ay 400,000. Sir, then ang required is imo i-compute ang unearned revenue nga dapat i-report as current liability ini ka December 31, 2021. So for the solution, ang imong current liability is 2021 to expire in 2022. Ang imong current liability to expire in 2022, so na kay 1,200,000. So ang imong non-current, since next year pa man sila, di pa man siya mao ang current year, so maklasify pa na siya as non-current liability. So diri mo gawas ang 1,800,000 and 400,000 nga nagtotal og 2,200,000. Illustration, escrow deposits. On the first day of each month, Griffin Company receives from a customer an escrow deposit of 30,000 for value-added tax. Griffin records the 30,000 in an escrow liability account. The customer's value-added tax for the year is estimated at 3,500,000 payable in equal installment on the 25th day of each month. On January 1, 2021, the balance of the escrow account was 200. Si Griffin Company naka-receive og 300,000. Then i-judge ang record sa escrow liability account. So ang customer na ay estimated niya 3,500,000 and ijang bayran kada 25th day of each month. Pagka January 1, ang ijang beginning balance was 200,000. So required is Griffin should show an escrow liability on behalf of this customer on September, take note sa September 30, 2021. So, ang imong solution ani is sa imong cash payments, nasa dyan 9 months nga gibaya, January to September. Ang imong buhaton ani is 3,500,000 i-times nimo sa 9 months divided by 12. So, ang imong buhaton ng cash payments is ang 3,500,000 imo sa dyan i-times sa 9 months, then imong i-times sa 9 months, and imong i-divide 12 months. So, na equal diha, so mo equal si dya og 2,625,000. And then, gisulti diri pag January 1, ijang beginning balance is 200,000. So, na kay beginning balance diri 200,000. Then, sa cash receipts for 9 months, ang na cash receipts for 9 months is 2,700,000. So, ang kaning cash receipts for 9 months, nakuha ni si Ja sa 300,000 times 9 months. Kay 9 months naman si Jang sige og hatag. And then, imo i-plus 200 plus 2,700,000. So, makam ka og 2,900,000. Then, dapat equal sila both sides. So, imong buhaton para makuha nimo ang ending balance or kay squeeze amount. So, ang 2,900,000, imong i-minus siya sa 2,625,000. So, naa kay ending balance or squeeze amount nga 275,000. Next, illustration, returnable containers. Kevin Co. sells its product in reusable containers. The customer is charged a deposit when containers are delivered and received a refund when containers are returned within 1 year after the year of delivery. Deposits for containers not returned within the time limit are accounted as regarded as proceeds from sale of containers. Information for 2021 is as follows. So, containers na deposit pagka December 31, 2020 from deliveries in sa 2019 natay 75,000, sa 2020 natay 90,000, then nag-equal siya og 165,000. Munig deposits for containers delivered in 2021, deposits for container returned in 2021 from delivery is 50,000, 2020 na ay 60,000, and 2021 na ay 70,000, and nag-equal ni silang tulo og 180,000. Then, ang requirement is to determine the amount of liability for deposit on returnable containers on December 31, 2021. So, ang solution ani, cash refunds for container returned in 2021 na ay nagkantidad ng 180,000. Money imong butang diha. And then, kay 2020 man so money mong beginning balance kaning 165,000 pesos. And then, sa imong proceeds from sale of containers, 25,000, asa man siya gikuha kuha ni si Jazz sa 75,000 pagka 2019 and 2019 po niya 50,000. So, 75,000 minus 50,000 ay 25,000 and cash deposits from deliveries 140,000 equals 305,000 sa pika side, sa right side, and then sa left side is 205,000. Kung patanawan, kaya ato pang kuhaon ijang ending balance or the squeeze amount. So, yung mong buhaton, 205,000 i-minus nimo sa 305,000. So, come up si Jaw amount ng 100,000 and mo na yung imong squeeze amount or the ending balance. Illustration, best estimate. Anthony Company sells cars. In 2021, the entity sold 1,000 units before discovering a significant defect in their construction. By December 31, 2021, 2 lawsuits have been filed against the entity. Below are the estimates made by the entity's management and legal counsel. First lawsuit, the entity has little chance of winning and is expected to be settled out of the court for $2,500,000 in 2021. The second lawsuit, the entity's legal counsel believes that it is likely that the entity will win. The entity is being sued for $1 million. So for the requirement, determine the amount of liability to be accrued on December 2021 as a result of this lawsuit. So for the solution, the liability to be accrued is $2,500,000. In the first lawsuit, since the entity is expecting to settle out of court, the estimated settlement shall be accrued in 2021. In the second lawsuit, since the level of uncertainty involved is only likely, which is equivalent to possible, no liability shall be recognized, but disclosures in the financial statements shall be made. Illustration, best estimate expected value. Loveco manufactures and sells motorcycle helmets. In 2021, the entity sold 1 million units prior to the discovery of a possible defect caused by malfunctioning factory equipment. The helmets were recalled will be repaired free of charge. Love is uncertain whether all helmets recalled will have the possible defect. However, the following estimate was made by Love's management and was approved by the board of directors. The repair cost, 40 million. The probability is 10%. Repair cost, 30 million. The probability is 20%. Then 20 million, the probability is 30%, and 10 million, the probability is 40%, equals 100%. The requirement is to determine the amount of liability to be accrued on December 31, 2021. For the solution, repair cost 40 million, 30 million, 20 million, and 10 million. The probability 10%, 20%, 30%, 40% equals to 100%. 40 million times 10%, so na ay 4 million. So na ay 40 million. 30 million, i-times nimo sa 20%, then na ay 6 million. 30 million, i-times nimo sa 30%, then na ay 6 million. 10%, i-times nimo sa 40%, then na ay 4 million. So, ang provision, total is 20 million. Illustration, best estimate, midpoint. In 2021, a lawsuit was filed against Kairico for patent infringement. The plaintiff is claiming 5 million in damages. Kairi's legal counsel believes that it is probable that Kairi will lose the lawsuit and pay damages of not less than 2 million but not more than 10 million. The probability of any amount within the range is as likely as any other amount also within the range. The requirement is to determine the amount of liability to be accrued on December 31, 2021 as a result of this lawsuit. Yung imong buhaton ani is liability to be accrued imong plus ang 2 million na imong minimum estimations na imong mabayaran 2 million and i-plus mo sa maximum ni mga estimation na imong mabayaran which is 10 million. So 2 million plus 10 million equals 12 billion i-divided by nimo og 2. So, mugawas or maka-came up ka og answer nga 6 million. Illustration provision changes in estimates. In 2019, Stephen Co. recognized provision for a probable loss on pending lawsuit of 10 million. Their lawsuit remains unsettled in 2020, necessitating a reassessment of the provision. Stephen determined that the probable loss on the pending lawsuit should be 14 million, required to provide all the necessary journal entries under the following independent assumption. 1. Law 1. The lawsuit was settled for 15,000 in 2021. 2. The lawsuit was settled for 12,750,000 in 2021. And 3. Stephen won the lawsuit in 2021. So the entry for 2019 is loss on lawsuit 10 million and estimated liability 10 million. Entry to be made in 2020 is loss on lawsuit 4 million, estimated liability 4 million. For the requirement number 1, if the lawsuit was settled for 15 million, so the entry will be estimated liability 14 million, loss on lawsuit 1 million since 14,000 ra ba dyan na determine, and cash nga 15,000. And cash nga 15 million. Sa requirement number 2, if the lawsuit was settled for 12,750 in 2021, so nasdya estimated liability nga 14,000 and nasdya cash nga 12,750, then nasdya na gain nga 1,250,000 since 14,000 ra malagi to yung probable inika 2021. And then sa requirement number 3, imo journal entry if nadaog si Stephen sa lawsuit in 2021. So simply, imo journal entry is estimated liability nga 14 million and gain on settlement since nadaog man siya, so was jay bayran nga damages. So nas jay na gain nga 14 million. So the changes in estimate of provision are accounted prospectively. Illustration, provisions premium. During 2021, Curry Company sold 100,000 boxes of cake mixed under a new sale promotional program. Each box contains one coupon. These coupons entitle the customer to a baking pan upon a remittance of 10 coupons and 350. The entity pays 500 pesos per pan and 25 for handling and shipping. The entity estimates that 80% of the coupons will be redeemed even though 50,000 coupons have been presented during 2021. So the requirement is to determine the amount of liability to be reported on December 31, 2021. For the solution, so since kay naman tayo 100,000 boxes and each boxes na contain of one coupon, then 100,000 boxes times one coupon over one box. And then, sa cost per pan plus handling and shipping minus customer remittance. So, may tabo ni si Jai is 500 plus 25 minus 350. So, na ay nag-equals ani o 175 pesos. Then, sa premium expense, so, nganong ng 1,400,000 man si Jai. So, ang premium expense is 100,000 na coupons, i-times nimo sa 80%. And then, i-divide nimo into 10 coupons times 175 pesos. And then, maka-come up ka og 1,400,000. And then, the number of coupons redeemed is computed as follows: 50,000 boxes times 1 coupon divided by 1 box. Since 50,000 na naman ka coupons ang iyang ma-redeem during 2021. So 50 boxes times 1 coupon over 1 box. So the net cost of coupons redeemed is 50,000 coupons divided by 10 coupons times 175. Then, na ay makam up si siya og 875,000. So atong net cost of redeem is 875,000. Watay beginning balance, then atay premium expense nga 1,400,000. So bring down 1,400,000. And para makuha na to ang balance and or squeeze or the squeeze amount ending balance, so atong i-minus ang 1,400,000 minus 875,000. So, come up to 525,000. Mo na itong ending balance as of December 31, 2021. Next, for the rebates, Paul Company offers a cash rebate of 10 pesos on each 500 of baking pans sold during 2021. Customers must fill up a rebate form and mail it to Paul. Paul will then mail to customers the approved rebate form which can be used in future purposes to Paul. Based on the entity's experience, only 20% of customers mail in the rebate form. During 2021, 500,000 packages of baking pans are sold and 85,000 rebates form were mailed to customers. The requirement is to determine the amount of liability to be reported on December 31, 2021. So, ang solution nato diriya is the 500 forms are computed as follows. So, na 500,000 nga packages, i-times nimo og 1 form divided by 1 pack. So, for the rebates expense, ang imong buhaton is to compute the 500,000 forms, i-times nimo sa 20% over 1 form, and then i-times nimo sa 10 pesos. So, na kay 1 million. And then, the rebates redeemed is computed as follows. 85,000 forms over 1 form i-times gihapon nimo og 10 pesos, so na kay 850,000. So for the rebates form mailed, so na kay 850,000, and then wa kay beginning balance, the rebates expense is 1 million. So bring down 1 million, then to get the balance and or the squeeze amount, so imong i-minus ang 1 million and 850,000, so na kay 150,000 nga balance and or ending balance.
Thank you.
A pleasant day to everyone. I am Kimberly Medico and I'll be discussing financial liabilities. So, a financial liability is a liability that is a contractual obligation to deliver cash or another financial asset to another entity. This typically arises from contractual agreements such as loans, bonds, or accounts payable. In simpler terms, it is a money or asset that you owe to somebody else. It is a contractual obligation to exchange financial asset or financial liability with another entity under conditions that are potentially unfavorable to the entity. A financial liability is a liability that is a contract that will or may be settled in the entity's own equity instruments and is a non-derivative for which the entity is or may be obliged to deliver variable number of entity's own equity instruments, and a derivative that will or may be settled other than by exchange of a fixed amount of cash or another financial asset for a fixed number of the entity's own equity instruments. So there are two major classifications of financial liabilities. So first is a financial liabilities at fair value through profit or loss, and the second one is financial liabilities at amortized cost. And the financial liabilities at fair value through profit or loss can be further classified into held for trading and designated. So first, let's discuss financial liability at fair value through profit or loss. So, its initial measurement. So, financial liabilities at fair value through profit or loss shall be initially measured at fair value, and its transaction cost or bond issuance cost directly attributable to issuance of bonds is treated as outright expense during the period incurred. Next is subsequent measurement. So, subsequent to initial measurement, the fair value through profit or loss is measured at fair value, and it has accounting for changes in fair value. So, as I've said earlier, that the financial liabilities at fair value through profit or loss can be further classified into held for trading and designated. So first, let's have accounting for changes in fair value under held for trading. So the changes in fair value are recognized as either unrealized gain or loss in P&L or under profit and loss. So the second one is designated. So changes in fair value are recognized as either unrealized gain or loss to be presented as follows. So first, the changes in fair value not attributable to change in credit risk must present the unrealized gain or loss in a profit or loss. And then the second one, the change in fair value attributable to change in credit risks must first, if it would create or enlarge an accounting mismatch in profit or loss, must present all unrealized gain or loss on that liability and profit or loss. The second one is if it would not create or enlarge an accounting mismatch in profit or loss, present the unrealized gain and loss attributable to changes in credit risk of that liability in OCI or in other comprehensive income. And last, the remaining amount of change in fair value must present the unrealized gain or loss and profit or loss. So I've mentioned earlier the term credit risk. So when we say credit risk, this refers to the potential loss that the investor or lender may face due to the failure of a buyer to pay the loan or meet their financial obligations. So next, determining the effects of changes in credit risk. So an entity shall determine the amount of change in fair value to the liability that is attributable to the changes in credit risk of that liability either as the amount of change in a fair value that is not attributable to the changes in market conditions that give rise to market risk, or using an alternative method the entity believes more faithfully represents the amount of change in the liability's fair value that is attributable to the changes in its credit risk. So to fully understand this concept, let's apply this to a problem. So I have your illustration. So the first illustration is the financial liability at fair value through profit or loss, no changes due to credit risk. So on January 1, 2021, nation's foremost CPA Review Incorporation issued a 4-year bonds with a face amount of 2 million for 1,935,152. So the bonds carries an interest of 8% per year payable annually on December 31. On the date of the issuance, the company incurred and paid commissions to underwriters of 10,000, and the bonds are to be appropriately classified as financial liability at fair value through profit or loss. On December 31, 2021, the bonds are quoted at 103%. Assume that there are no changes due to credit risk. So we are required to compute for first how much is the interest expense for 2021, the second how much is the unrealized loss or gain in 2021 to be recognized in the profit or loss, and last is we have to prepare necessary journal entries for the year 2021. So for the first requirement, we are going to compute for the interest expense for 2021. So number 1, interest expense. For the year 2021. So to compute, we have the face value amounting to 2 million pesos. We multiply it by the nominal rate, which is 8%, and we multiply by the months outstanding from January to December. We have 12 over 12. Then we get the interest expense. So we have here 2 million times 8% times 12 over 12 is equals to 160,000. So the interest expense for 2021 is 160,000 pesos. So for the second requirement, we're going to compute the unrealized loss or gain in 2021 to be recognized in the profit or loss. So we have the fair value of the bonds. So to compute for the fair value of the bonds, we're going to multiply the face value, which is 2 million, times the quoted price, which is 103%. So we get 2,060,000. Then we less the carrying value, amounting to 1,935,152. So we get the unrealized lost, which is to be presented in profit and loss. So 2,060,000 minus 1,935,152. So we get 124,848. So the unrealized loss or gain in 2021 to be recognized in the profit or loss is equals to 124,848 pesos. So for the third requirement, we're going to prepare necessary journal entries for the year 2021. So our first journal entry is on January 1, 2021, which is the issuance of bonds. So January 1, 2021. So we have financial liability. We debit financial liability. So fair value, so profit or loss amounting to 1,935,152. We debit also the commission expense. These are commissions paid to underwriters amounting to 10,000. Then we credit cash, which is equal to 1,945,152. And our second journal entry is on December 31, which is the interest expense. So we debit interest expense amounting to 160,000, and we credit cash 160,000. And last is we need to record the unrealized loss. So we debit unrealized loss and we credit financial liability, which is fair value through profit or loss, which is equal to 124,848 and 124,848. So for the second illustration, I have here a financial liability at fair value through profit or loss, however with change due to credit risk. The problem is on January 1, 2021, Bacolod Corporation issues a 10-year bond with a par value of 1,500,000 and annual fixed coupon rate of 8%, which is consistent with market rates for bonds with similar characteristics. Bacolod uses observed or benchmark interest rate. At the date of inception of the bonds, this rate is 5%. At the end of first year, observed benchmark interest rate has decreased to 4.75%. The fair value interest rate of bond is 7.60%. Bacolod is required to present the effects of changes in the liabilities credit risk in the OCI or other comprehensive income. So we are required to compute first the unrealized gain or loss to be recognized in the other comprehensive income during 2021, and second one, compute the unrealized gain or loss to be recognized in the profit or loss during 2021, and last, prepare journal entries at the end of the period. For the first requirement, we're going to compute the unrealized gain or loss to be recognized in the OCI or other comprehensive income during 2021. So to compute, we have here market price of the liability, end of period at 7.60%. So to compute this, we need to compute first for the present value of principal, which is equal to 1,500,000, which is the carrying amount. We multiply it using 7.60% for the remaining 9 periods. So we have here 7.60 divides 100 plus 1. And then for 9 periods, we have 1, 2, 3, 4, 5, 6, 7, 8, 9. So we have 0.5172. So 1,500,000 times 0.5172, we get 775,800. And we add the PV of interest, which is equal to 1.5 million carrying amount times 8%, which is the effective interest rate, times the PV of 1 using 7.60 again. So we have 7.60 divides 100 plus 1. For 9 periods, we have 1, 2, 3, 4, 5, 6, 7, 8, 9. Minus 1 divides 0.076. We get 6.351. So we multiply 1,500,000 times 8% times 6.3521, so which is equals to 762,252. So now we get the market price of liability end of period, which is equal to 775,800 plus 762,252, so is equals to 1,538,052. So this is now our market price of the liability end of period. So we have 1,538,052. So here we less PV of liability using the sum observed interest rate and instrument specific IRR or internal rate of return, which is at 7.75%. So to calculate this, so first we get the present value of principal. We have 1,500,000. So you multiply for the PV using 7.75. So 7.75 divides 100 plus 1. So for 9 periods, we have 1, 2, 3, 4, 5, 6, 7, 8, 9. We get 0.5108. So 1,500,000 multiplied by 0.5108, we get 766,200. And we add the PV of interest, so which is equals to 1.5 million times, again, 8%, which is the interest rate, times PV annuity of 1 using 7.75. So 7.75 divides 100 plus 1. And for 9 periods, we have 1, 2, 3, 4, 5, 6, 7, 8, 9. Minus 1 divides 0.0775. We get 6.3124. So to calculate, we have 1,500,000 times 8% times 3124. So we get 757,488. So we have now the PV of liability using the sum observed, interest rate, and instrument specific IRR. So we have here 766 200 plus 757,488, we get 1,523,688. So we have here 1,523,688. So we get now our unrealized loss to be recognized in OCI or other comprehensive income is equals to, we have here 1,538,052 minus 1,523,688. So we have 14,364. So for requirement number 2, we're going to compute the unrealized gain or loss to be recognized in the profit or loss during 2021. So to compute, we have the market price of the liability end of the period rather. So we already computed it. We have here 1,538,052. And then we less the carrying amount of fair value through profit or loss equal to 1,500,000. We get the increase in financial liability at fair value through profit or loss. So is equal to 1,538,052 minus 1,5, we have 38,052. And then we less the unrealized lost in the OCI, the one we compute earlier, which is equals to 14,364. So 14,364, we get unrealized loss to be recognized in profit and loss equal to, we have here 38,052 minus 14,364 is equal to 23,688. So for requirement 3, we're going to prepare the journal entry at the end of the period. So we're going to debit unrealized loss and OCI amounting to 14,364, and unrealized loss and P&L, which is 23,688. So credit financial liability at fair value through profit or loss. So we have here 14,364 plus 23,688, we have 38,052. So next is the recognition of financial liability at fair value through profit or loss. So the recognition, it is a process of removing a previously recognized financial liability from an entity's balance sheet or statement of financial position. So next is the presentation of financial liabilities at fair value through profit or loss. So financial liabilities through profit or loss should be presented in the current liabilities section of the statement of financial position. So the next category of financial liability is a financial liability at amortized cost. So this includes the bonds payable, notes payable, and loans payable. So I'll be discussing bonds payable, while the notes payable and loans payable will be discussed by the next reporters.